Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Jug chat channel. You can post questions, comments, and content related to the topics of my presentation or the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. And for those of you who have watched my webinars before, please bear with me. I'll go through this as quickly as possible. If there's anyone new here, I need to make sure they understand the basics of my approach to trading. So the key tenets, or the basis of my approach to trading, I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500, the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And for the S&P 500, when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and the hedge dealt exposure with the ES futures. And for the NASDAQ 100, the same applies. When traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades, and the hedge dealt exposure with NQ futures. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned to the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Jug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Efficient here, Stephen, and Papichi. Sorry about that. Welcome, glad you're here. Great to see all of you. All right, here's my agenda for today, Monday, August 25th. First of all, I wanted to go over news items, economic data, events, and earnings for the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. When I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. Some names are just difficult to pronounce for Americans, I guess. All right, so let's get started. Let's start with news items for the week. And we'll talk about last week just a little bit with Jerome Powell's speech at Jackson Hole on Friday, the reaction. And so let's take a look at this week. There are a few data items and a key earnings report. So let's take a look at that. First of all, economic data for the week. So coming up, nothing today. Coming up tomorrow, 8:30 a.m. Eastern Time, durable goods orders come out at 8:30 again, and at 10 a.m. consumer confidence. And then on Wednesday, earnings. I'll more about that in just a moment. Thursday, 8:30 a.m. Eastern Time, GDP comes out, GDP data. And then on Friday, big data release of the week, PCE data, 8:30 a.m. Eastern Time, and 10 a.m. Michigan consumer sentiment. All right, so durable goods, GDP, and PCE data out. All right, let's take a look at the earnings chart. And this is the Spotgamma dashboard home screen. So let's take a look at the earnings chart. So the stocks that I follow, 3 that are reporting earnings after the close on Wednesday, the 27th. NVIDIA, of course, the most important stock in the world, then CrowdStrike and Snowflake. All right, so we'll take a look at NVIDIA today as well as on Wednesday to see how traders are positioning in front of earnings. All right, so that's news items. Let's move on to positional analysis now. I'm going to start with the SP 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to step back, take a look at a higher time frame. I'm going to go to SPX, the underlying index, and SPX. This is Thinkorswim, a one-year, one-day chart. So last Wednesday, I talked about the reaction after the August expiration. That was a week ago. And there was a little bit of a correction, brief correction. It was about 3 days. Consolidation on Monday, correction Tuesday through Thursday, and then a big rally after Jerome Powell's speech on Friday. And that was took the SPX back up to previous resistance levels. We'll take a very close look at that in just a couple minutes. All right, so let's move on now to a shorter time frame. Let's go to a 30-day, 1-hour chart. All right, so this is the let's start with July expiration. The rally continued on. There was a pretty big pullback right in the middle between July and August, and then the rally continued up until this level right here with the top right around 64.80. So rally resumed, consolidation. Then the August expiration, consolidation continued for 1 day, then a pullback to the previous support zone. And then big rally on Friday, back up to the top of this range. All right, let's take a look at levels on this chart. Let's start with expected moves. Dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last week, from Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from the previous day. So in this case, it would be from last Friday. I do post those levels in Discord every day, the day before, for ES, SPX, ES, and NQ. And I do calculate all those independently. And again, those are based on the options market. All right, so consolidation today. All right, let's take a look at the Spotgamma levels on this chart. Let's start with the key daily levels. These are shown with the dark red lines. These are available to Spotgamma subscribers on a variety of trading platforms. They're based on gamma-weighted open interest. And the first level, the first key daily level, is the absolute gamma strike at 6,000. That's a strike with largest absolute positive and negative gamma. And for the most part, With some minor exceptions, the absolute gamma strike has remained at 6,000 for quite some time. All right, the next level up is the put wall at 6,300. That's the strike with largest net negative gamma that can be expected to act as support. Above that is the volatility trigger at 64.45. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And it certainly appears that SPX may be trading in a positive gamma range. More about that in just a minute. All right, so this is based on Spotgamma's older open interest model, the total open interest model. And we'll take a look at gamma based on their new synthetic open interest model in just a couple minutes. All right, then finally, the call wall remains at 6,500. That's a strike with the largest net positive gamma that can be expected to act as resistance. And if SPX does move up, that is certainly the next level that would be in play. All right, the only level that shifted from Monday is the volatility trigger from last Friday that shifted higher today was the volatility trigger, again up to 64.45. All right, let's wrap up our view of SPX with a 1-minute chart. All right, so there's that previous consolidation range. And you can see on Friday, SPX moved up toward the top of that range and is now trading at a very narrow range, kind of right into the middle of that consolidation. All right, that's SPX. And while I'm taking a look at this, let's take a look at last Friday, and then we'll compare that with today. All right, so this is from last Friday. First of all, this is Trace. We'll take a look at Trace for today in just a minute. So this is the rally after Jerome Powell spoke at Jackson Hole. And the whole rally was really over in about 45 minutes, finding resistance at this big positive gamma, 99 percentile strike at 64.70. And the blue shading showing the strong positive gamma up above. Remember, in positive gamma, market makers are trading against price. So that level acted as resistance. All right, so again, that's last Friday. Let's take a look at a couple of views of Bookmap from last Friday. All right, so this is the equivalent to that SPX 64.70 level. Note the limit sell orders. Kind of a wall of sell orders there, also acting as resistance. So that was taken about right around 11:30, screenshot 11:30, and this is the rest of the day. So you can see again the rally was fast, furious, and over about 10:45 with the resistance above, positive gamma, and the limit sell orders up above. All right, so that's from last Friday. And we'll take a look at a SPY chart in just a minute. Actually, let's go ahead and take a look at that now, and we can see. And by the way, SPY trades 24/5 in Schwab, so we're looking at the rally from Friday and then the overnight price action. Still not making any progress. And now SPY is trading down below its volatility trigger. At 645. That level, around that level, acting as resistance. That's right here. All right, so again, SPX, volatility trigger shifted higher. Same for SPY. So the volatility trigger put wall and absolute gamma strike all shifted higher for SPY. So that's a bullish hat trick. Now it looks like this 0 gamma level may be acting as support. Whoops. That's at 644. All right, back to Bookmap now. Let me check for questions. And Peepaw, welcome, glad you're here. Ask, can you guys make alerts or signals? Now, by you guys, do you mean Bookmap? So when the thick red order blocks are generally broken through, you can state that on the chart. And when it's a spoof, you can also pop up alert signal. I'm not quite sure what you're talking about. I'm not sure it's possible to make alerts for that particular circumstance. You can contact Bookmap support or maybe get in Bookmap Discord and ask that question. Maybe somebody else knows. All right, so here's Bookmap. And in Bookmap, so I've just spent a lot of time looking at SPX and SPY levels, and I have those levels on my Bookmap chart, my ES chart. So there's the SPX 6445 volatility trigger, which around that level has acted as support. Then a couple of key SPY levels. There's the 644 0 gamma level, kind of a critical level today, now acting as support. And then the SPY 645 volatility trigger, acting as resistance. And then there's also this 6470 level that I just talked about, acting as resistance last Friday, that strong positive gamma. And we'll take a look at setups in just a couple of minutes. All right, so narrow range today. Note the trend break just after the open. We'll talk about setups in just a couple of minutes. Trend break just after the cash open. Right here. So again, more about that in a couple of minutes. So the point here is really for SPX levels, 6445 volatility trigger on the downside, and then the 6470 positive gamma resistance from last Friday, acting as resistance. That's before the cash open. So that would not appear on the SPX chart. All right, let's zoom in on this. All right, let's take a look at NASDAQ. NASDAQ a little bit stronger today. Let's take a look at the underlying index charts. Let's start with QQQ. Zoom in on this. So the rally on Friday, then a grind down ever since the Friday high, and a little bit stronger rally today than the SP 500. Right now, QQQ is trading above its 572 volatility trigger. And here's the absolute gamma strike at 570, 0 gamma at 571. So all key levels for QQQ today. All right, for QQQ, the volatility trigger and absolute gamma strike shifted higher. So a bullish brace for QQQ. Let's take a look at NDX. All right, NDX, volatility trigger and 0 gamma level also in place. And right now it looks like the volatility trigger at 23,490 acting as support. We can zoom in on that. So there's that volatility trigger acting as support. All right, back to Bookmap. So just like ES, I have in the NQ chart, I have key QQQ levels. There's the 570 absolute gamma strike, 71 0 gamma, 572 volatility trigger, and then there's the NDX 490 volatility trigger. And again, we'll take a look at setups in just a couple of minutes. All right, so again, bullish brace for QQQ and NDX the same. The volatility trigger and put wall both shifted higher compared with Friday. Again, setups in just a couple of minutes. All right, let's wrap up our positional analysis by taking a look at gamma. All right, so let's go to the trace gamma heat map. This is available to Spotgamma subscribers. The gamma heat map. Red shading is negative gamma, blue shading is positive gamma. So a very similar picture to last Friday with positive gamma up above. Let's zoom in on this. And Popichi asks, what does volatility trigger mean? Volatility trigger is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That's typical of a negative gamma environment. We're looking for higher volatility. And then in positive gamma, above that level, market makers' position on the gamma curve again is positive, and we're looking for lower volatility as market makers trade against price to hedge their delta exposure. And you can see a little bit of that. This is the hedge wall here. That's the label, but it's actually the volatility trigger for an index. And you can see there's some negative gamma down below, red shading, and positive gamma, blue shading up above. And we'll take a look at another look at gamma in just a minute. All right, so this is trace showing the strong positive gamma up above. There's that 64.70 strike. It looks like that has been gamma has dropped pretty substantially. So let's step back in time and remember gamma is greatest at the money at expiration. So traders may have been taking some of that position off. So let's go back to right around 10 a.m. So you can see the highest positive gamma right at 64.90. So the highest positive gamma was up a little bit higher. And gamma at that position has diminished pretty substantially. And you're welcome. All right, so all this positive gamma up above has been diminishing as this is most likely zero DTE as expiration approaches. And options start to lose value, or traders taking their position off. All right, one last view of gamma. Let's go to let's go to Equity Hub. And this is based on the new synthetic open interest model. And above this level, above this level, positive gamma. Below this level, negative gamma. Right now, SPX is trading right around 64.60. So that is right here close to the low volatility point, which would be the highest positive gamma. That would be right here at 64.80. Now this is only updated once a day. All right, so it looks like right now SPX is trading, at least according to this, to the highest positive gamma. If price does start to fall, it would fall into negative gamma and most likely accelerate down. All right, so that is a static view updated once a day, and then trace is a dynamic view that's updated every 10 minutes. All right, so based on this, I was looking for pretty low volatility based on the positive gamma here. All right, let's take a look at some setups now. So let's start with the SP 500. And as always, I'm going to start by taking a look at what options traders have been doing today. This is the hero signal. This is also available to Spotgamma subscribers. And this chart is updated in real time. So we've looked at a static image in Equity Hub, then trace updated every 10 minutes. And then this is updated in real time. It's showing options trades and market maker hedging activity, again in real time, for the SP 500 index components. That's SPX, SPY, ES, and XSP. The white line is price, and the purple line is the hero signal. A rising hero signal indicates traders are taking positive delta options positions. So the direction of the line is in terms of options delta. So with a rising hero signal, that indicates traders are buying calls and or selling puts. Then a falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. And you see welcome, glad you're here. Sorry about the pronunciation. All right, so it looks like that is the case now. Traders starting to take negative delta options positions. All right, so that is the S&P 500 index signal. There's another signal that we can take a look at for the S&P 500. That is the equity signal. This is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So typically the index signal is a little bit more noisy, shows the turns, the pivots in price a little bit more clearly, whereas the equity signal generally signals the overall trend a bit more clearly. Now I've separated out puts and calls here. The orange line shows calls, the blue line shows puts. So the rising orange line indicates traders are buying calls, market makers sell the calls. So in this case, they have to buy stock to hedge their delta exposure. And the rising blue line indicates they are selling puts. That's also positive delta. And again, when traders sell puts, market makers buy puts, and they have to buy stock to hedge their delta exposure. All right, so let's go to Bookmap. And look at the price action at the open, right at 9:30. Pretty choppy. Much better trades in stocks today, I thought. But pretty choppy price action, but bullish. Guided by the S&P 500 equity signal. And then finding resistance at positive gamma and also the SPY 645 volatility trigger. All right, back to hero. Let's take a look at the equities, the index signal. Traders buying calls. That started a few minutes after the open, selling puts. And then the S&P 500 gradually started to move higher. Call buyers took their foot off the gas. Same for put sellers. Then right around 12:45, traders started selling calls, buying puts. And the S&P 500 started to move lower. So let's take a look at this. So we know that 12:45, that's when the call line and the put line started to move lower. And not really the case for the equity signal as traders continue to buy calls and sell puts. So a little bit of a conflict there in the signals. All right, back to Bookmap. All right, so the net effect, my view is a very narrow trading range. All right, let's take a look at NASDAQ. And PPA, I think it's best that if you make the suggestion yourself, so you can specify exactly what you're looking for. All right, so a little bit stronger day in NASDAQ. Let's take a look at Hero and see what options traders have been doing. We'll start with a NASDAQ signal. And just like the S&P 500, there are two signals that we can take a look at for the NASDAQ. And this is the index signal showing options trades and market maker hedging activity for the NASDAQ underlying index components that we looked at earlier. And that is NDX and QQQ. And you can see the rising orange line indicates traders buying calls. Rising blue line indicates traders selling puts. And they take the foot off, so that really starts just after the open, then start to take the foot off the gas somewhere between 11:30 and 12, and then start taking negative delta options positions right around 12:45. So you can see the bullish morning, flat lunchtime, and then now in the afternoon starting to take negative delta options positions. So the other signal that we can take a look at for NASDAQ is the Mag 7. This is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla. And we'll take a look at many of those stocks in just a minute. So really this is, you can see the similarity between the Mag 7 and the S&P equity signal, which is really just the Mag 7 plus 493. Take a look at these numbers here. Call signal positive, just over $1 billion. Puts positive, right around 436 million. Let's compare those numbers with the Mag 7 signal. And almost identical. So it looks like a lot of this options trades in the S&P 500 are almost entirely driven by Mag 7, especially the call number, almost identical, 1 billion. So it looks like, again, call buying is almost exclusively in the Mag 7. All right, Mag 7. All right, any questions about the indexes? So let's take a look at some stocks, then we'll get to live market. And Apple, I'm going to start with Apple. So Apple kind of led the way this morning. So let's zoom in on this. So there are a couple of things going on. One reason I wanted to take a look at Apple here. So you can see traders buying calls. That's shown by the rising orange line. And again, when traders buy calls, market makers sell the calls. They have to buy stock that hedge their delta exposure. So you can see up until for about the first 10 to 12 minutes, the Hero signal was pretty flat. Then there's this vertical line. And I call that an institutional kickoff. So you can see traders had already started buying stock, and then a large institution comes in, buys calls, large number of calls, and then other traders follow. And Apple moves up, but Apple did start moving higher. I think it was really one of the, maybe the first of the Mag 7s that started to move higher this morning. And then the call buyers, especially institutional traders, followed, and a couple more large institutional block orders buying calls here, these large vertical lines. All right, after about 10:20, 10:25, call buyers took their foot off the gas, and Apple is consolidating. Well, let's go to Bookmap. Go to Apple. Apple first out of the gate this morning. Strong. There's where the institutional order came in. And price rockets higher. Finds resistance at 229. 1020. Call buyers take the foot off the gas and Apple consolidating. Oh, USIA wants to take a look at RTY. I can take a look at the Russell, yeah. All right, so now it looks like Apple, some aggressive sellers started to come in. You can see the starting right around just after 1 o'clock, more magenta volume dots. So aggressive sellers started to come in, and cumulative volume delta has actually been trending lower since just after 11 o'clock. All right, so that's Apple. Next stock, Microsoft. So the thing about Microsoft is this 505 level. That's the hedge wall. Good entry point for long this morning as Microsoft found support at that level, around that level, and now back down to that level. Let's see what options traders are doing. So let's go to Microsoft. And Brian says, thanks for the stream and sharing so much knowledge. You're very welcome. Welcome. Glad you're here. And thank you. Thank you. All right, Microsoft, again, key was really this 505. Hedge wall support. And I'm always looking at these Spotgamma levels as support when tested from above or resistance when tested from below. And that's exactly what happened here. Call sellers took their foot off the gas at the 505 hedge wall, and traders continued to sell puts. Aggressive buyers came in, and Microsoft moved higher. And traders really started selling calls more aggressively right around 1040. It looks like price is following lower, and the put sellers now have taken the foot off the gas. So right now, call sellers dominating. All right, that's Microsoft. Next stock, NVIDIA. Again, big earnings report coming up on Wednesday afternoon. A lot of aggressive buyers. You can see all the green volume dots. The volume dots in Bookmap show market orders, and I have the volume dots set on delta. So green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. Rising cumulative volume delta. A lot of traders buying shares. And absorption at the 182 level. There's a limit sell orders in the order book. Price did not quite make it to that level before reversing lower. Let's see what options traders have been doing. Back to Hero, NVIDIA. Traders buying calls and selling puts ahead of earnings. Zoom in just a bit. Again, traders buying calls. Takes them a little while to get going. But overall for the day, driving price higher up until about 12:15. Call buyers take the foot off the gas. Put sellers foot off the gas. Now price consolidating. Note price did break above the 180 key gamma strike. All right, so that's NVIDIA. Next stock, Palantir. All right, key levels for today. 155 hedge wall, 150 put wall. Price dropped down from the hedge wall down to the put wall, found support, rallied back to the hedge wall, found resistance, then finally it broke above that level. And traders continue to buy calls and sell puts. Next level up above is the 160 key gamma strike. So let's go take a look at Bookmap. Go to Palantir, and we'll get to Tesla in just a moment. All right, Tesla, Palantir, remember again, 155 hedge wall, 150 put wall. So there were some aggressive sellers at the open. You can see all the magenta volume dots for the first few minutes, and then some buyers started to come in. Palantir found support at the 150 put wall. Took a few minutes to break through the resistance at 155 and now grinding higher as traders continue to buy calls and sell puts. All right, let's take a look at Tesla now. All right, very strong bullish day for Tesla. Let's see what options traders have been doing. Took Tesla a little while to get going. So let's see again what options traders have been doing. Back to Tesla. All right, so again, it looks like it took a little while. Traders sold calls, bought calls, a little bit of a call peak pattern there. Hero lines were flat. Then right around 11:10, 11:11, traders started buying calls. Tesla broke out of this range, that consolidation. That was right around the last closing, right around the 340 level, last closing. And now the next target up above is the 350 call wall key gamma strike. So right now it looks like traders have taken their foot off the gas, the call buyers, put sellers. We'll keep an eye on that, see if that continues. All right, so Tesla, it took some patience. Here's that consolidation range, right around the 340 last closing. Then price broke above as traders started aggressively buying calls. Again, remember that was about 11:10. There's that 350 level up above. Next price target. That's a lot of limit sell orders in the order book. Efficient here asks, how would you interpret Equity Hub? Are you talking? Tell me more specifically what you're talking about, which instrument and which view in Equity Hub, and I'll take a look at that. All right, let's take a look at a couple of crypto-related stocks over the weekend. Efficient here. We'll take a look at that in just a minute. All right, so let's wrap up our view of stocks with a couple of crypto stocks. So on Friday, as Jerome Powell spoke, both Bitcoin and Ethereum rallied pretty sharply. Now, I haven't looked at Ethereum over the weekend, but it looks like there was a large seller of Bitcoin yesterday afternoon, right around 3 p.m. Eastern Time, and Bitcoin dropped sharply, and that had an impact, of course, on crypto-related stocks. Let's take a look at Coinbase first. And let's see what options traders have been doing at Coinbase. I'm going to shift to the total signal. It makes it a little bit more clear. So we'll have to jump back. All right, so traders were taking negative delta positions at the open. Then they shifted to positive delta. Note this 310 hedge wall acted as resistance. A little bit of resistance again, the support. Then options traders took their foot off the gas right around 1020. Coinbase consolidated a few minutes later, started taking negative delta positions. Now Coinbase back to the 310 hedge wall. Back to Bookmap. Here's that 310 hedge wall. I didn't have time to draw price lines, set up price lines for this, but I just drew this line. 310 hedge wall. Support, resistance, support, support, support. Now price is broken down below that level. Or that's Coinbase. One note about Coinbase, both Coinbase and MicroStrategy, the bid-ask spread are a little wide. So maybe, if you do trade these instruments, maybe better off trading options or option spreads. All right, that's Coinbase. Let's take a look at MicroStrategy. Also, wider bid-ask spread. Let's see what options traders are doing. And we'll go to MicroStrategy or strategy. Support right at the 340 hedge wall. Now it looks like as price dropped, traders continue to take negative delta options positions, but looks like buyers came in right at the 340 hedge wall, and then the options traders reversed just about 5 minutes later. Then right now, they've taken the foot off the gas, maybe taking slightly negative delta options positions. Strategy grinding lower. Let's take a look. All right, so here's the 340 level. Remember, let's draw a horizontal line. 340 level. Remember, the options traders continue to take negative delta options positions, but price reversed higher, and you can see why. Aggressive buyers started to come in. Sellers are exhausted, shown by the smaller magenta volume dots, and aggressive buyers started to come in, and then the options traders followed along just a few minutes later. Cumulative volume delta rising. So in this case, the buyers of stock came in at the 340 level, at the 340 hedge wall, which again acted as support. Then consolidation after that. So pretty typical pattern of a lot of the stocks that we've looked at today. Flush down at the open. Options traders come in, move price higher, then take the foot off the gas and price consolidates. All right, back to Tesla. Efficient here wants to take a look at Equity Hub. All right, so there's Tesla bullish trade. Trading right around 346 right now. So let's go to Equity Hub. And we're in the synthetic open interest model, which is their newer model, Spotgamma's newer model. Let's take a look at Tesla. And well, this is pretty wide. All right, so we saw Tesla was trading right around 346. All right, so what this is showing, we'll take a look at the low volatility point, which would be the highest positive gamma. And as price moves higher, this is showing, as price moves higher, this is showing gamma becomes more negative down to this low volatility point at 375. That's the most negative gamma. So the way I interpret this and fish it here is that as Tesla continues to move higher, price would accelerate as gamma becomes more negative. And actually, I just recorded a case study video for Spotgamma with a very similar example where Tesla opened right at the low volatility point and gamma became more negative in either direction. And in this case study that I just recorded for Spotgamma, Tesla moved lower and accelerated as gamma became more negative toward the low volatility, the high volatility point, which would be the most negative gamma. So Efficient here says break 350 to the upside. Maybe not today, but you can take a look at this tomorrow. If Tesla continues to move up, let's take a look at the older model, so we can take a look at the older levels here. The older model, the total open interest model. So this is showing the call wall and key gamma strike at 350. Of course, that's a strike with the largest call position. And as price moves higher, these lines the slope decreases, indicating volatility would start to decrease, and price would slow down, but that is all the way up to right around 400 here. That looks like that's most likely 400. So I am long Tesla in my longer term account. So yeah, that would I would be happy with that. All right, back. So let's 400. Let's go back to the synthetic open interest model. So this is showing the low volatility point at 375, the high volatility point, most negative gamma. All right. Let's go back. Let's check on the indexes now. All right, so crypto stocks trying to recover, and the S&P 500 index signal still looking negative. Let's check the equity signal. Flat now. This is a pretty typical pattern. Equity signal flattens out. Index signal turns lower. Very typical pattern. Again, remember this signal is typically more noisy. Shows the turning points a little bit more clearly. All right, let's check trace. All right, so trace again, a lot of positive gamma up above. Looks like the last closing price for SPX around that level, acting as resistance. Let's check Charm. So Charm is showing buying support and selling pressure due to time decay. So it looks like buying support up above, but there could be some selling pressure down below here. Let's check delta pressure. So selling resistance up above, buying support below. But it looks like somewhat neutral in the current price level. All right, back to Bookmap, SP 500. And efficient here, you're welcome. Did I answer your question? Does that make sense? So think of gamma in terms of volatility. All right, so now it looks like ES is trying to break down below the 644 zero gamma level. Looks like some angry sellers are starting to come in. Level acting as support, trying to break through. All these lines in the subchart moving lower. All right, so the dark blue to magenta line, that cumulative volume delta, that's falling. And then the yellow line showing stop orders. Falling yellow line indicates selling stop orders, sell stop orders. And then the light blue line is showing iceberg orders. Those are large orders traders use to hide their size. All lines falling. So aggressive sellers, sell stop orders, and large traders selling iceberg orders, helping to fuel that move lower. Looks like there is a buyer with iceberg orders there. And let's check NASDAQ. All right, so NASDAQ relatively much stronger than ES. Down to the QQQ, 572 volatility trigger, and the NDX 490 volatility trigger just below that. In the case of NASDAQ, it looks like large traders continue to buy with iceberg orders, as they have been doing for most of the day. Let's check Tesla. There's that 350 level looming up above. So maybe not today. Let's see what options traders are doing. All right, so options traders have taken the foot off the gas. Tesla consolidating. All right, back to SP 500 index signal now, continuing to move lower. Equities maybe starting to move lower as well. So if this continues, I would look for a move lower. All right, efficient here says foot off the gas, consolidate and retreat, retest 350, breach to the upside, I suppose. Yeah, that would be fine with me. Rate cut sentiment. Not sure. I haven't checked the news for Tesla today. But it's definitely been stronger earlier for most of the day. All right, let's go back. Let's check. Check ES. Still struggling at the 644 zero gamma level, and still a lot of aggressive sellers, magenta volume dots. All right, last call for questions, comments, stocks. All right, remember tomorrow, durable goods orders at 8:30, consumer confidence at 10, and then big earnings on Wednesday after the close, NVIDIA, CrowdStrike, Snowflake, and we'll talk about NVIDIA especially on Wednesday. See how traders are setting up before earnings. All right, everyone, thank you very much for watching. Thanks for your questions and comments. Oh, I forgot. You see, I wanted to take a look at Russell 2000. We'll take a quick look. So for Russell, I take a look at this, which shows options trades and market maker hedging activity for RTY and IWM. And this is net negative delta for the day. Traders taking negative delta options positions. So RTY, there's nothing to look at for RTY. That is the futures contract. But I can take a look at the underlying index components, just like the S&P 500. Take a look at RUT, IWM, and then the combination of the two. And this is what you would use for if you trade RTY. Okay, hope that makes sense. All right, everyone, again, thank you very much for your questions and comments. And I will see you on Wednesday. All right, bye.